traders, Dale Pinkard here at TradeGATEHub.com. We are sponsored and powered by TradeView Markets. Check them out. They're the broker where you could trade everything. Check out their spreads, open a demo, trade long with Mike and myself. And last week, well, I was really in the zone. Everything I said Monday manifested. That's not the way it usually works. But it did manifest, and I don't have the same level of conviction I had last week, but I do have biases. So I wanted to start off with US dollar yen because this is very important for people that are precious metal bulls, and I'll get to that in a minute. But we did get rejected in US dollar yen at the 78.6 level. The only thing I don't like about it is even though we had a divergence, it's over 80. My rules are look for divergences under 70. So if we get a new high, and I think the whole ball game may be Paul on Friday speaking at Jackson Hole, and I think he'll talk fairly hawkish, and I think that will give you selling opportunities in the yen, buying opportunities in the other currencies, albeit it may not be from the same levels. So I think Friday is the most important day this week. Anyway, my bias is that we're forming some type of top here in the end. And, I thought that we would trade over 137, and here we are. Again, even on the 4-hour, if we diverge, it's still going to be over 70. So there's a lot of momentum. And the point I made last week was just because you're right about the long side up to about above 137 doesn't mean that you automatically reverse. I still need to see some momentum work, but my bias is looking for shorts in US dollar yen. I want to talk a little bit about the euro here as we're trying to press new lows for the move, and it's possible that we do get new lows for the move. We took out, I was looking for 78.6, and that was par 40, so we're about 40 under it. A good signal would be a trading back above this black speed line, trend line. Would say that this was just exhaustion. One thing I would caution Euro bears about is the positioning in the Euro. And there's a huge amount of net long dollars and also a huge amount of net short euros. In fact, the largest net short position in euros since 2018, and 2018 generated a pretty good rally. I think I'd have to go to the monthly for this. Although it took a week, let's just see where we were. It was February, I think it was 2020. Was this it? March? Yeah, this was February of 2020. The old low was 2018. So as you can see, here we are in February where we have the same amount of shorts here. And you could tell, a month or so later, look at the rally that it generated. So my bet is, and I don't have an entry here yet, is that I know a lot of people talking 95 in the euro. My bet based on positioning is the next 500 pips in the euro, I think has a contrarian shot more to the upside than to 95. Looking at Canada, last week I said I'd be looking for sales up around the 61.8 level, and we're about to see that with divergence. Going to give it another day, see what happens up here. A lot of this is probably risk off with the S&Ps, but Canada, this would be a zone I'd be thinking about it. What's really surprised me is when you have risk off, like, S&Ps right now are down 58 handles, right? Getting hammered. Very surprising to see, again, the commodity currencies showing a lot of resilience. Aussie actually up 24 on a day like this. So that's the market tell to me. I've always felt that Aussie would be one of the better buys. Doesn't mean that we can't make one more low or even, push towards the low 68s. But Aussie is really giving you a bit of a market message with the dollar up this much. Let's get to the dollar. Dollar's trading a little bit above the 78.6 level right now. and there's still too much momentum for me to want to fade it. Look at the RSI on the 4. I need divergence at least occurring on the 2-hour, which means I need some kind of break and then another rally. So maybe we get a break and then Powell speaks and we push up and make a new high. But I have to drill down all the way to the 15-minute chart to start getting divergences, and that's not enough to expect a major turn. I need it on at least a 4-hour, which, not even close to showing it. So I would say that the first sign of the dollar doing something wrong would be under the 9-day, but I'm still looking to buy commodity currencies and still looking for a reason to short yen. Remember last week I was talking about a 3% yield on the 10-year, and we're there. And one of the reasons for looking for new high, that rally in the dollar over 1 in 750, was I was looking for 3% yield. So just because we're there doesn't mean that I'm going to right away buy notes. But when I look at things like TLT, and TLT is lower today, and I look at something like a daily chart, I know there's big gaps here, but it's very possible that we're looking at possible head and shoulders bottom on the TLT. Let's pull up the weekly. So here you go. So here's your left shoulder, came in around 112, and here's your head. And I think as long as we hold, say, 111-ish, 110 and a quarter, there's a chance that we put in a low in the bonds. And then if I do just a measured move, next breakout over 120 is going to give you 132, 134. And that would take you right back to the major breakdown with some weekly moving averages. So I'm not ready to say that the bonds are going to make new lows here for a 3. We could still get a potential right shoulder here, especially if the S&P gets to target. Here's my look in the S&P. And from last summer, well, it's still summer, but in June, I was looking for 4,200. When I talked to you, I said, just because it got there doesn't mean that I'm going to do anything. We had a throw over. I made a couple of attempts here and got stopped out. And now we're back inside this overthrow, this wedge line. And I'm not looking for a crash here in the S&Ps. But I do think that we could trade down towards 4,039.50. To me, it seems a little too pat. And I talked about this in last week's videos that, we would fail from the 200-day moving average, which is what happened. But I think eventually we're going to take that out, especially if it's shallow and we only break to, 40.50 or so. I'm not going to turn real bearish on this market till we start taking out the 3,800 level. Then I think you have problems. But I think there's going to be a break to buy between 40.50 and 4,000, and then one more rally above the 200. Can you imagine the bullishness that's going to happen, and even maybe some euphoria once we close over the popular and widely followed 200-day over 4,300, and then maybe from there makes a move up to 44, 45. That might be a better level to try short. But in the meantime, I think we're about halfway through this move. We'll see what happens into Jackson Hole there as well. Want to just cover the metals here, which we need a US dollar yen top, but very interesting, the level that held so far here in silver at 78.6. It's one day does not a trend make, but if you're bullish metals, that's a pretty nice retracement to buy. When you look at it on a daily basis, you're wrong under the lows, so may do some work down here, but my bet is that we don't see new lows in silver. Gold took out 50% and now is trading, fighting its way back here at 61.8. And both of these markets, silver and gold, are going to be dependent upon if we finally get some type of high in the US dollar yen, because if we fail from here in US dollar yen and you just take the move we had from the highs up here at, call it 39.5 to 30.5, 900 handles. So, 900 handles, if we fail from here, is going to give you at least 128. And maybe we get some type of fib extension of this that takes it even lower, down towards 120. If you get that kind of movement in the yen, I'd expect yields to be peaking out, heading towards 220, and precious metals to enter wave 3 to the upside. One last thing I want to leave you with, and the crude is breaking. Perhaps we're going to get this Iran nuclear deal through. I talk mainly bearish on the crude, but if I get a break in the crude to new lows, which looks like it could happen, it'll set up a 3 drive to a bottom formation. I'd be looking at it at 84. So keep an eye on the crude right around the 84 level. I think that could be a buying opportunity, and maybe what happens is during this corrections, oils sell off, and then you get a nice buying opportunity. They've still held up much better than the crude. So those are my takes for this week. Tread lightly, volume's very thin. The adults get back from the Hamptons after Labor Day, and keep an eye on some of the things I talked about in here. And this yen is really going to be important. Aussie, if you get a break with dollar continuation strength, I think that's going to be a nice short. And metals are trying at retrace levels to bottom. So good hunting the rest of the day. I'll be back here tomorrow with Mike. Mike will be with you, I believe, in an hour and 18 minutes. Invite you to join us. I post here in our main chat room. Mike posts here. We have traders posting here. It's free. We're not trying to upsell you a subscription. And if you want to transfer an account to TradeView, no costs involved. That's just, if you want, no pressure. Just saying you don't know if you have a good racehorse till you run it against another. Good hunting. I have a real interesting guest on Thursday, Alistair McLeod. He wrote a piece talking about, Putin's strategy and some of the things that might be happening in the derivatives market with the new Fed regime that we have. So, get ready for that. Mark it on your calendar for 9:30 a.m. on Thursday. As always, we here are always rooting for you. It's our mission to build up and identify traders every day. And remember, don't just count your pips, count your blessings. Adios from California. Dale Pinker.